Hey guys, this is HTrade. Welcome to Road to Futures. Right, so let me just quickly, I want to actually show you guys something interesting. I want to show you the trades you could have caught today during this bank holiday. Now, I was awake around the time that these trades happened, so I will be backtesting every single one of them. But let me just quickly take a look. The guys, Wes and a few others, are actually trading during USD bank holiday, which is Martin Luther King Jr. Day. All right. Unfortunately, I'm not going to trade. That's why I'm not in the live trading session at the moment. But let's quickly have a listen to see what is going on. Okay. He is looking for a sell, which is
so
actually pretty cool.
It's a great example of what I can take instead of the SMT. Sweep. The fish who Wes has a crush on. Oh my god. Damn, OG Wes X. Yeah. First X. Cooked.
Having fun like normal.
Ivy, what's up, bro?
All right, so I think they get definitely looking for a sell here.
Oh my god, he's back.
Let's have a look.
More of a side check.
Currently, the 15-minute time frame is...
I actually can't believe this fucking account is level 10.
It's current 15-minute time frame is currently bullish, so...
Okay, it's not heading.
It's a difficult one, but it's plausible. It's possible.
Can I get a kiss?
Because 4-hour time frame is bearish,
so we're actually gonna end,
and 1-hour time frame is bullish. So it is good to look for a sell right at this point in time.
Patience, Wes. Know your limits, side chick.
All right, so
yeah.
He was looking for a sell.
Trade today. I mean, like,
but that's a no trade, he says.
Like, this candle was a big candle, and it was only 11 points. Okay.
All right, cool. In any case, let's quickly get back to the trade that I was actually looking at today, which is absolutely insane, right? So I'm going to do a replay here. So basically, I was here when this happened. That's why I marked this trade out. It was an absolutely beautiful one. So first of all, take a look at the 1-hour time frame. So currently the 1-hour time frame was busy deciding, does it want to close above this gap or below this gap? And boom, it closed below the gap. Literally at 2 a.m. New York time, it closed below the gap, which means 1 hour is bearish and 4-hour time frame is also bearish with this huge new week open gap here. That's still clearly an indication that the higher time frame is bearish at the moment. So very easily, I opened my trade, and as I explained in my previous video with my whole strategy, your stop loss can be in one of 3 places. Number 1, the high of the 15-minute inverted gap or gap that you're using. So it could be here, could be the high of this candle where the fair value gap is in, or it could be the beginning of the fair value gap move. And that's where I chose to put this stop loss and then just let it run. You could have taken partials here if you like. And here is where I've taken profit around here. That was an absolutely beautiful sell trade. Absolutely insane sell trade. So let's move forward. Let me just quickly hide this countdown timer. So here, just keep in mind, here's the 1 hour time frame, right? So this is the higher time frame. It's still bearish, right? It's going up. There's an inverted fair value gap that signaled that the 15-minute time frame is now bullish for the time being. And my question to you is, did we close above this 1 hour fair value gap? No, we did not. We're still bearish. All right. And boom. Could have caught this sell here as well. The moment that this fair value gap have been created, could have waited for a retracement, a fib retracement possibly. I think up until here, and then take a sell. But to be honest, it just went. Sometimes you need to use your own discretion where you want to enter. You could have taken your stop loss on this one. Would be difficult because it's so high, very, very high. So here I would have put my stop loss here above the fair value gap instead, and aim for 1 to 1.5 at least. But 1 to 1 point. Let's see. It almost got to 1.5 before it started reversing. Wait, let's have a look. Yeah. That calls for grounds to close the trend. Close. Very, very close. There is now a bullish fair value gap. I would have closed the trade here. It's an indication for the 15-minute time frame. There's a possibility it might change bullish here. So I would have closed my trade here. Yeah, somewhere here. Boom. All right. So I was not personally in this trade, but this would also have been a very nice trade. Now let's proceed. I want to get to the one that I actually bought. This one was absolutely insane. 1 hour time frame is still bearish. Still bearish. Not only that, take a look here. We have a fib retracement of 50 to 61.8. What did I say in my strategy video that I have created for you guys? Fib retracements. Bigger traders out there use fib retracements because they always want to sell from premium or buy from discount. Right, cool. This is premium. All right. Now we wait for an entry model. Entry model is simply an inversion of this fair value gap or a retracement. Now this one here was a little bit tricky, right? So you could have entered the sell here. But what I did was I waited for a small retracement. And after I got my retracement, I entered this trade, put my stop loss there, aimed for 2 risk reward. Boom. There we go. Which was this one, yeah. All right, cool. And boom. This is very close to New York. This was very, very close to stop loss. Very, very, very close. And I just gave it some time. It printed another bearish fair value gap, as you can see right there. And that's it. There's the trade. Boom, done for the day. You could have actually entered here as well. If you missed this entry, you could have entered there. Boom. Where's your stop loss going to be? It's either this candle here or that high there. And aim for 1 to 1.5 or 2. Up to you. Yo. Take a look at that retracement. And then we are currently here. So at the end of the day, I took this early sell-off. Thing is, this is a US public holiday, so you literally need to take what you get. That's all. Because New York, the New York volume is not going to be as big as other days. London session was beautiful, but New York session, nah. Take a look at what's this currently doing. So we used this fair value gap, this 1 hour fair value gap, right? We bounced off it, Internal to external trade. Boom. There we got it. Now, what is price doing? We're bouncing back into this 1 hour fair value gap. But the 1 hour, the 1 hour and the 4 hour fair value gaps, the moment that they already have been used for an internal to external move, there's a possibility that they may not be used or not be respected the second time round. There's a possibility price can do this. Oh, take a look here on the 1 hour. Goes above it. Small retrace and boom. Go into this massive gap that have been created by the new week open. And the news, obviously, with Trump and Greenland, etc., etc., etc. So at this point in time, the 15-minute time frame is currently bullish. Boom, there we go. So buyers, if I were you, I would have entered this buy right here after the retracement into this fair value gap. Stop loss here or here and aim for the skies. Easily. So checkpoint number 1 would be London high. Checkpoint number 2 would be Asia high, which is the new week open gap. That's up to you. But listen, where's the volume? Where's the volume? There's no volume here for this kind of move right now. And this is a retracement trade or a reversal trade. The 1 hour time frame is still currently bearish. So the 4 hour time frame is still currently bearish. Do you really think I'm gonna buy right now? No way in hell. I'm gonna move on to the next day. That's all. That's all that can be done. It's only as much as you can do on a US public holiday. The volume is just not there. If you compare it with other days like this or this, you see, where's the volume? There's no volume. Take a look at this. There's a volume. So today, not much. It is what it is. Anyways, I hope you enjoyed this one and enjoyed the breakdown that I've given. And as I explained in my previous video, that's my full strategy in the previous video, explained from beginning till end, how you get the bias for higher time frame, which time frames I follow, and which time frames I use for my entry, and what is my entry model. Two different types of entry models, fair value gap and inverted fair value gap. Both of them explained beautifully, and I'll actually leave a link to that video in this description below of this one. In any case, hope you guys have a great public holiday on your side. Cheers.